So to tell us what's happening in his world on the currency front, Nick Twidale from FP Markets is here with me in studio. Nick, nice to see you.
Thank you.
You can take your pick. I mean, I will start. Actually, I'm going to change my mind. Aussie dollar, 11.30. Is it a big risk event for the Aussie? Does things start to get more interesting when we move toward RBA next week?
I think it's not a massive risk today. I think what we're going to see, and I think you nailed it on the head actually, if you're looking at the price action at the moment, we are gyrating around 71 cents. I think there's a lot of options interest around that level. And we really do need a real big kick, and the RBA needs a little bit of a kick for that next move in the Aussie dollar. I think we're still being dominated by what's going through in sentiment and indeed what we're seeing from the US. So I think for the Aussie dollar, we're actually going to be more dominated by international events and the global perspective rather than what we've got on the domestic front for the medium term. And then I think once we start to hear anything different from the RBA, then and maybe we do get some data that comes out and really kicks us one way or the other, but it doesn't feel like we're going to get that at the moment. So I think once we hear anything dramatically different from the RBA, that's going to really influence the Aussie dollar. But for the moment, really, I think the international, the global economy is going to have more of an effect. So,
and you can't think, you can't look past China when it comes to its impact on the Aussie. We've just seen the Shanghai futures contract for tin coming online, and it's down by more than 3%. So we're starting to see a lot of the nerves around China lockdown supply chains being expressed in metals markets, and that will impact the Aussie. Is that helping to cap it?
Certainly, yeah, and I think that's going to put on a cap on it for the short term as well. Even though we've got that positive news that Shanghai's coming out, there's a lot of, I suppose, unravelling of what's a big mess. You only have to look at those charts that pop up every day on the ships that are surrounding China sort of ganging up on their coastline,
yeah.
because and that's a real big effect on the supply chain, and that's a massive effect for us on the Australian dollar. So that's going to take some time to unravel, and I think we're still short-term bearish because of that. Once it starts to unravel, then we'll start to get, and obviously we've got political change here as well, which hopefully is going to mean better relations with China. That should be positive for the Aussie. So when you're taking all these things into account, that's why I'm sort of looking at the dollar side of the equation more really than the domestic side. China will dominate that next move for the Aussie, the next big move for the Aussie, I think. And I'm hoping it's going to be to the top side, to be honest.
Okay, but in the short term, I spoke with Sean Callow from Westpac earlier on, and he expects to see the Aussie still fall below the 70 US cent level. Does that seem plausible?
I agree. Yeah, I think we're gonna find some sort of a base in the mid 60s in the medium term, and then I think we're up to what's going on with the rest of the world. If we do see China come back to the party and come back strongly, then the Aussie will come back to sort of the 70s. If we don't, I still think the dollar side of the equation's going to dominate, and I still think we've got those issues with the US economy. I think we've got inflation. We've heard from the Fed minutes. I think they're going to continue to be looking to raise rates, and I think because of that, it's really a sell on rallies for the Aussie dollar at the moment.
At the moment, but how do you see it panning out? So we get China coming back online in some way, shape, or form. Whether or not the stimulus happens in a big bang format, they've committed to stimulating the economy. We've got the US Fed indicating that they're going these 2 50 basis point hikes, but might just sit and watch the dust settle for a bit, or at least go smaller from there. So by the end of the year, is it possible that the Aussie dollar hits 75, 76?
Certainly, yeah. And once again, we're talking from 71 cents at the moment. So, yeah, I suppose we're sort of calling down short term, medium term. But then I fully expect if we do see normalisation in the markets and we do see the world getting back to what we hope is a more normal and a stronger Chinese economy coming through and creating demand for Australia, then I don't see any reason why we can't be sort of mid-70s again by the end of the year.
What other currency pairs really catching your interest right now, Nick?
Euro, obviously, I had a good look at that, and I think we popped in a chart that it really hit a former support level and came back off of that, obviously helped by Fed meeting minutes. I'm looking at that strongly. I think dollar yen's going to be another interesting one for us as well as we start to move forward into a more normalised economy. We've had a fantastic run at the moment. People are calling for that extra step higher to 150, but we seem to have found sort of a happy level just underneath 130 at the moment. So I think the next impetus for dollar yen is going to be an interesting move, and because we've seen such a huge move over the first 2 quarters of 2022, I think there's more moves coming in dollar yen, and maybe it's going to get back to the reputation it used to have of being that sort of crazy, wild, swinging currency pair that we used to know and love and fear.
How about the sterling as well? Because we saw it slipping to a session low after that Gray report was released, but there's a lot of concern in my read about the state of the UK economy and what's happening going forward.
I think so, yeah, and obviously it sort of starts at the top. There's a lot of pressure on Boris Johnson, whether he's going to be staying in. He's still under pressure for his antics during COVID. If you get a change in leadership, I think there's more downside risks at the moment for sterling on the crosses and against the dollar, and especially if you take into account, I'm sort of fairly bullish on the dollar. I think cable's probably one of the trades I'd be looking at for more downside pressure. And also the economy, we need to keep looking at the data as it comes through. If we are starting to see weaker data coming from the UK, if that continues, I think we're going to see further downside for cable and indeed sterling on the crosses.
Nick, I haven't spoken with you in a while. Am I allowed to ask you about Bitcoin?
Yeah, of course you can.
So what do you see happening here? Because it is very range bound.
It is very range bound. I think we've had that big hit. We've had the issues that we had with the association with Luna, concerns over the tether. I think Bitcoin's now the pseudo trade, really. We know that. We've had that movement. We're down at what, 50% from its highs. It's like, where do we go from here? I'm still a bit of a bear, to be honest with you. I think there's going to be a big consolidation in the industry as a whole, across cryptocurrencies, across the blockchain environment, across the whole sphere. And I think what we've seen, there's probably going to be a bit more rationalization, and that will probably put fear into the Bitcoin environment through other coins. When we see some that have actually got what we'd probably call a tangible volume, tangible sort of value in the real world, some will fall off and probably completely disappear. But I think we'll then start to see Bitcoin feel a bit of pressure from that. But then I think Bitcoin is here to stay. So it will find a base somewhere. Where that base is, I'm not entirely sure. I'm sort of thinking the next step down is around 20,000.
We will keep our eye on 20,000, currently still today down below that 30,000 level, at least time stamping it just before 11:30 here. Nick, it's been nice to speak with you. Thank you.
You too. Thanks a lot.
Nick Streidel there joining us from FP Markets.